So we were just talking about taxes. As an investor, I'm sure you're following this. How will it affect your business?
As it stands right now, not very significantly. There's a lot of tweaks. There's an obvious attempt, more than anything, to lower the corporate tax rate, which I think is very detrimental to the United States, having the third highest corporate tax rate in the world. That just doesn't make sense. I think that's, from my perspective, that's the most significant change that we should all be encouraging.
Do you, through your companies, do you pay a fair amount of corporate taxes? Will you make more money if the corporate tax rate is reduced to 20%?
Some, but you know, 3 of my companies are REITs that are pass-through vehicles, and one of them is a full taxpayer and pays a lot of tax, and I think that puts it in a negative competitive position with its competitors around the world.
And what about the business interest deduction, if it's limited to 30% of your income?
Hard to say. I think that that's likely to be a minor problem.
So, Mike, can you talk about the carried interest provision, which, as I understand the amendment, would extend the amount of time you have to hold the interest in order to really take the beneficial capital gains tax treatment. This was something the president campaigned on. Why is this a big surprise?
It was a surprise that they kept it in the bill because the president did campaign against it, and it's been a target for years. Doesn't raise a whole lot of money for the Treasury, so they could get rid of it, but obviously the people who take advantage of it have lobbied hard to keep it. The change they made is that it will still be there, but you have to hold on to an investment for 3 years before you can claim the benefit.
Sam, how do you feel about that?
I think this is all a tempest in a teapot. Nobody understands. What we're talking about is carried interests, or interests that inure to the sponsors of funds. There are very few funds that begin and end in 1 year. As a matter of fact, there are very few funds that begin and end in 3 years. I did a couple of major funds in the 90s. One was 9 years, one was 10 years. The fact that I, in effect, was a 10-year investor in my own fund suggests that a capital gains treatment is most appropriate. But I think this is all cosmetics.